Hey, what's up, YouTube? Welcome to Super Stock Bros. My name is Ace, and today we're going to be going over the CCIV and Lucid deal, as well as how our other SPACs are doing. So stay tuned. Okay, so first up, CCIV and the Lucid merger. So it was announced, and they finally put out the investor slides and how much the pipe was at and the equity valuation. So CCIV fell after hours because of the actual valuation and the market cap due to that valuation. So a bunch of numbers here, but really the main numbers to focus on is the 1.6 billion pro forma shares and the 24 billion market cap because of how much they were valuing each share, which is essentially $15. Okay, so what does that mean for you? Well, considering that CCIV was $60 this morning, if you had $60 per share at 1.6 billion shares, then technically the price of CCIV or Lucid would have a market cap of 96 billion. Okay, so obviously 100 billion is way down the line. That's a few years from now. And because of that, the reaction for the stock was to bring it down. So now you have $40 a share times 1.6. You have a more reasonable valuation of 64 billion, and that's why you have a sudden drop. Of course, coupled with that, you have people that just swingers in the stock, day traders. They just wanted to sell on the news, buy the rumor, sell the news. And then, of course, you also have whales bringing down the price if they wanted to jump in. So, all three of these factors results in a down price today for CCIV. However, I do really think that it's a great long-term play. I'm going to be sticking with it. My dollar cost average is very high. It's actually like around 50s. So don't worry if you're bag holding. I'm right there with you. This is a long play. Now, just to upgrade your confidence as well, the Lucid presentation was actually awesome. It actually goes to show you their technologies and the patents that they have, as well as the great management team. So again, you're betting on the jockey, you're betting on the management team, and you're also betting on the expertise and the technology of Lucid. What is to be seen is how well they can develop the factories, what's their efficiency, what is their cost, and can they bring down costs in the long run, as we saw with Tesla. So this is something that you're going to be seeing. Obviously, Tesla was the trailblazer, so Lucid has the experience and the knowledge gained from Tesla, especially because as you know, the CEO was actually part of Tesla. So hopefully, he learned a lot from their process and can apply it to Lucid and their processes going forward. So again, I'm pretty bullish on the stock still, but our price targets, unfortunately, have come down. I had said 90, and a lot of other YouTubers also said 90, including Stock Mo and Zip Trader. They were going for about 80, 90, or 60, 80, and now it's come down a little bit, probably to around 40 to 60. Like I said, I'm holding it. So what do I have in my portfolio? As usual, I'll bring up our portfolios here. I still held IPOF, and we'll come to that in a second. But as you can see, I have CCIV and CCIV warrants. I have 150 shares and 500 warrants. Okay, so we're looking at a pretty big loss right now of about $6,000, but that's okay. We can make it up in the long run. Don't look at the day-to-day prices, otherwise it will drive you crazy. And just for completeness, let's look at the chart. As you can see, we started off at 60. Like we said, for Monday morning, we would have a great spike up. I actually did write a covered call, and I made about $400 from that, so that was pretty nice. And then, of course, after hours, you had the huge spike down, which is unfortunate. But like I said, I believe it's going to make a comeback, if not in the short term, and definitely in the long run. All right, so beyond CCIV and Lucid, we also had an IPOF. We had a tweet from Chamath saying that he was going to do something. He said he was going to F some stuff up. It was hilarious. But, even small tweets like that fits into our strategy. Like we said, Chamath is a leader. People will follow him. And, even small tweets like that caused a spike up in the price. IPOF itself went up to about $17, and the warrants shot up like crazy as well, over 20% today. And good on everybody that got in. Like I said, I'm holding those till 10 and I'm sticking to that. Even these small tweets really confirms our strategy. It's willing to launch IPOF to over 20, and I think warrants are going to be over 10. So we're going to sell it at $10. That's our strategy. We're sticking to it, and we're not moving from that. So back to the portfolio. As you can see, it went up to about 6. Actually, it was higher than that. I think it was around 630 at one point. And we're keeping it. So our profits right now amount to about $1,200, but we're sticking with it, and we're looking for the full double up so that we can keep doubling and doubling. Okay, that's it for my short update. I just wanted to say that this was a red day in the market. Of course, we were all expecting corrections with economic stats coming out this week, as well as talks from Powell and Yellen. We're expected to see some interesting updates, and I will keep you all posted if it affects you and the market directly. But really the main concerns here are commodities are going up. Inflation, therefore, is it's already rising. And therefore, you know, prices of houses and everything like that is actually already going up. We're seeing effects in Texas with the snowstorms there knocking out power and how that's affecting their prices. Sorry for anybody that lives there. Praying for your safety, and hopefully you can make it through these trying times. I know that a lot of people have already recovered, but you know, it's always tough to see something like that. And further, when a market has a down day like this, you should, you know, think about buying opportunities and everything like that. Just be careful because this week is going to be a very important week for tracking ahead into the future. If you're looking to jump in, just think about having some cash on the side so that you can buy further into the dips. You don't want to be in a situation like in last March when everything was dipping down to very, very low levels and you kept wanting to buy in, but you didn't have cash to do it. So just keep that in mind. I don't think it's going to go that low, but there. I mean, we've had many green days in a row, and you tend to have some pullbacks and some corrections. I hope not, but that's just the reality. Okay, so that's it for me today, Stock Bros. Hopefully the rest of this week are going to be green days, but let's watch closely for that economic data and to make sure we can switch gears at any given time, and that way we can make some gains.